Dash was a special case where we saw an ability to not only something that as we researched and as we sort of started to answer those questions, we were like, this is a really great opportunity and this is a really great currency to add to our platform. But we also sort of, like I said earlier on, like fanboyed out a little bit and saw the value in it. And so we were really excited to have the opportunity to even be able to just add it in that way.
Hey again, everyone. I have another distinct pleasure today, which is to chat with the Salt Lending head of product, Rob Odell. How's it going, Rob?
Good. How are you?
I'm doing fantastic. One thing that's I'm always very keen on seeing is business solutions that bridge the gap between the crypto world and I wouldn't even say the fiat world, but the established world, because people are living off of the traditional systems, and now we have cryptocurrency, which is something that's crazy and new and experimental and just is there. And to see how that works for actual real people and not just crazy people trying to experiment is always a very big thing of interest. So can you give like the really quick elevator pitch on what is Salt?
Absolutely. Yeah, that's something that it's, as the company started out, really, it started out as something that, there was obviously a lot of the founders had Bitcoin and other cryptocurrencies and were, like wondering where they can spend it, how they can use it. And so they realized a need, and it turned out to be a very apparent need where you can actually, have your cryptocurrency, hold on to it, and then basically get a loan against it. And so you get some dollar amount less than the amount you hold. So a simple example would be, if you have $100,000 in Bitcoin, with Salt, you can get up to $70,000 in cash to spend however you'd like to.
Interesting. So how does that work? Because a certain amount of value in a coin has a propensity to fluctuate quite a bit. Like, for example, what is it, like the 80% drop in Bitcoin, which is one of the least affected of all the coins, or this last year. So generally speaking, first off, when you have that as collateral, so you send the money over to Salt's custody, correct?
That's correct. Yeah. So you send it to our infrastructure, and our, two things that we pride ourselves in currently. One is no assets are ever commingled. So when you have a Bitcoin address and you send Bitcoin to us, it's yours. You can see it. You can check it on chain. You can always see the balance there. And we actually, as of earlier this year, have 100% insured all of our assets for borrowers. So we have the ability to scale that up as needed. So as obviously you mentioned volatility. As the price goes up, we can scale that insurance up. But one of the things we wanted to do in addition to the highly secure manner in which we accept Bitcoin, we wanted to add that insurance layer just to give people a more traditional sense, kind of like an FDIC type thing, but obviously private insurance.
Yeah. So explain it to me like this. So say I have, and I've actually been in this situation before because I have been living exclusively off the cryptocurrency for a few years. And most times that hasn't been a problem, but there was one place I wanted to rent from, and I couldn't explain that I get paid by a blockchain, really. So the proof of employment was a little bit hard. Right. And they're like, well, do you just have like a bank information? I'm like, no, I mean, I could show you something on the blockchain. And that's where kind of like, all right, well, why don't you find another place to live? So what happens if, say, I got 50 grand at Dash, right? Say, what is that now? Like 500 Dash, a little bit like 400 or so Dash. Say you have that lying around.
Yep.
And I can't prove my employment because I work for a decentralized autonomous organization. I want to rent. I can't prove that I have in the bank. So I guess I'm just going to need to get money out of that in order to, say, start paying rent, for example. How does that work? So I send it over to you guys, and then I can get a loan out of, what is it, up to, say, what, 70% of that?
70%. Yeah. So we, one of the things we did early on was, I think we started at 60% LTVs. And then since we launched at the end of 2017, really our first version of the platform, obviously everyone's well aware of what happened through 2018. So we actually lowered that to a 50% starting LTV just to add some more protections for borrowers. And then as time went on and our systems got better and our and our monitoring systems got better specifically, and our ability to, monitor down to, milliseconds, essentially, we made that more. So basically, the more we wanted to be able to unlock more value from your cryptocurrency, right? So we upped that back to 70% LTV, and then you're able to get a loan against that. And we offer many different types of loan terms. So up to 36 months right now. You could do a principal and interest loan. You could do an interest-only loan. So there's a lot of different options for you as a borrower to decide what makes the most sense for you. So it really is a way to, like you're saying, like bridge this sort of temporary problem, really, where people need to spend traditional cash because that's all that is accepted in the universe that you live in. But you want to make this transition, and we do see that happening in the future. But for now, you need this bridge to kind of get yourself to that next level, next step.
So how do you make payments on the loan? Can you do that in cryptocurrency?
You can. So currently you can pay back your loan in dollars. You can pay back your loan in stablecoin, USDC, True USD. And then you can also, one of the things we don't encourage, but you can do is you can actually make no payments. And what we'll do is we'll liquidate essentially the portion of cryptocurrency in your account to make that payment current.
Interesting. So basically, say I was like a hodler for life, whatever, one of those types of people. I get 400 Dash. I put it in there and I take out a loan for, let's just say, 25 grand.
Mm-hmm.
And then at some point, Dash goes to the moon. And what I do is I just take out the rest of that, which is probably going to be like a few hundred, like most of that in Dash, and just leave whatever portion behind is worth the 25 grand and take the rest and throw it into a brand spanking new Lamborghini from cryptoemporium.eu, shout out, that actually sells those kinds of things directly in Dash.
Right.
So that's how it would work. If I do, I could just leave the remainder behind. But if I just needed that to be able to get the fiat and not to get just the capital in general, if I just need it in fiat and then the price is exactly the same later, I'd probably have it more in my interest to actually pay it back in, pay back the loan actually over its course rather than just liquidate the collateral. And so I would do that so only USD related things, not actual crypto itself.
So that is something that we're working on currently to accept. One of the things that we have has both been, I guess, good and bad, is that we want to abide by all the regulations in all the places that we operate in. So, according to, in the United States, according to the CFTC, Bitcoin is a commodity. And so there's regulations about how you can pay that back. And, we want to make sure we abide by all of those. And so we are absolutely in the process, and it's on our roadmap to accept basically anything that you are borrowing as payment as well. And I think Dash actually presents a perfect use case for that, where you're collateralizing something like a Masternode for a loan, and you're obviously getting payouts on that. And so if you wanted to, what we want to make available, at some point, is the ability to pay back that loan in Dash, which would make a lot more sense, because the whole point is you're operating outside of this ecosystem, or you're spending dollars on something else that you're not getting a return on, like rent. So it doesn't really make sense to pay back in dollars. And so we do want to make that available at some point. I don't really know when that would be. It's all up to our legal team and obviously even generally regulations around the world.
Now, it might be a little bit of a tough question, but a hair split question. Is it possible to say implement something like Shapeshift into the site that actually converts to, say, Tether? Or is they're like that's, and the reason it's a tricky question, of course, is because Tether and other stablecoins are just technically, they're just like a cryptocurrency, but they're kind of also not. It's a little bit of a part of their allure might be because of the legal gray area, honestly.
Yeah, absolutely. I mean, that's something that, so we recently added, or back in December, added USDC and True USD. And those were internal debates, just because is it a cryptocurrency? Is it a dollar? Our stance on that is it's a dollar representation it's a cryptocurrency representation of a dollar. So it makes sense for us to accept those as payments. And so that's not out of the question. I think we actually early on had Shapeshift integrated with our platform, and then based on some changes they made, had to remove that temporarily. But that's absolutely something that we're interested in adding back. I mean, I think for us, the user experience is based on feedback that we get from current borrowers. And so we would love to, if that's something that we think borrowers would want, we're absolutely open to adding that kind of thing.
As far as a little bit more of a hair split on this, how possible is it for someone to use the platform if they're completely unbanked? So obviously you got a lot of crypto, no bank account. You can send that in for collateral. Sure, you can find ways of paying back the loan, but as far as getting the actual money from the loan, is there a way for an unbanked person to receive something like that?
Yes, we are currently in the process of, and upon request, we can do this. It's not built into the platform yet, but we have a really great loan team that works with everyone who wants to do this. But we actually pay out loans in USDC and true USD. So for all intents and purposes, you don't need a bank account to operate with the SALT system. It's just not something that you'll see as an option when you log in, but if you reach out to our loan team, our support team, they can help you navigate that and that request. But that's actually one of the things that's on our roadmap in the very near future, I would say within the next quarter.
Yeah. Now here's another question, which, wouldn't be surprised if you haven't figured something out for. Is there a way to sort of leverage the platform? And it's a little bit outside of the wheelhouse right now, but for a bill paying kind of system. So one of the challenges that people living off of cryptocurrency have is that there's not everywhere that accepts them. And especially if you don't have a bank account, then it's difficult to just pay certain bills without literally coming with a stack of ones or a stack of cash, going to a Walmart or some other money services center, and then doing something like that. So imagine something like this. What if you say, okay, look, I got a bunch of crypto. I have bills to pay, but they don't take it. I just don't want to keep on cashing out every time and doing some weird workaround for the unbanked to just pay my electric bill or rent. Why don't you guys I'm going to give you a chunk of money of crypto, and then you basically pay my bills for me and debit it from the crypto account. Is something like that at all possible? And the reason I'm asking if it's possible, other than, obviously let me make my life in particular more convenient, but I noticed that bill pay services for cryptocurrencies are extremely rare in the US, especially, probably because banks keep on shutting them down.
Yep.
So I don't know. What are your thoughts on that?
I think that what you're describing probably falls under something like kind of like a running line of credit. Where you basically deposit, some amount of crypto that you have that you're willing to, have at stake, and then draw on it as needed. That is something that our chief operating officer is working aggressively on, the mechanics of how that would work, what that would look like, how we would, monitor the LTV in the same way, what kind of payments would you have, what kind of interest rates would you have. There's a lot of nuance to it. We've discussed it at length, and I think that what you're describing is something that it's actually the model that would make more sense for us, and I think for our users, because of what you just described. I think that's one use case, but we've gotten a lot of really positive feedback from current borrowers that have said the same thing. They're eager to get a loan, but they don't need, if they have $100,000 in crypto, they don't need $50,000 right now. They just need 10 to get started or do whatever they need to do at the moment, and then they want to draw more later if they need to. And so we're aggressively working on the mechanics of that and what that might look like as an offering.
Yeah, beyond just the loan part of it, but the payment part of it, rather than, oh, I want like $2,000 to pay rent and some bills every month, then that I get, and then have to still figure out the mechanics of, or just, you guys have the banks, you pay it for me, kind of thing.
Oh, I see. Yeah, that's a good suggestion. That's something that would probably need to be explored. But at this point, I don't think anything's out of the question. We're having a lot of discussions, a lot of product debates, and I think that into the customers that we are servicing. And so if that's something that is determined that users really want, then it's absolutely something that we'll start to investigate and figure out how we could do that. Especially considering, like what you said, where the relationships exist with us, with certain banks, and we've worked really hard and spent a lot of time doing the due diligence of basically being able to even open a bank account. As you know, crypto companies have a hard enough time doing that on their own.
Although there might be some positive developments out of Wyoming and other places, but I'm sure that's another several hour long discussion.
Yeah, absolutely.
As you're talking about masternodes and being able to have a Dash masternode, but get a loan out on it.
Yes.
Can you just explain really quick how that works?
Absolutely. So this was one of the more exciting things that we've worked on probably since the launch of the platform. As we evaluate collaterals that we want to add, it's based on a lot of different things. Can we sell it on behalf of the lender? Is it a security? Is it a currency? Is it a utility token? And then really like voting from our current user base. We had a voting mechanism for that, and then have also gotten inbound loan requests against different collaterals. And Dash was one of the highest requested ones, other than the ones we already have added. And so, we realized that we couldn't just accept Dash like at face value like we do Bitcoin or Litecoin. There needed to be special considerations made. And so what we did was our engineering team, shout out to them for sure. They're super talented group of people who spent time trying to understand the Dash ecosystem and what masternodes are all about, how they work, what really the Dash community is about. And so basically digging through all the documentation, we found a way that allows you to write a transaction. It's called a ProReg TX transaction that will transfer the Dash from your wallet to our wallet, but maintain the masternode status, wherever you're running your masternodes from. And so giving users the ability to do that, not only do we not commingle those assets, but it allows them to hold their Dash safe with us because we have the insurance, we have the non-commingled assets. So you don't have to keep it on a treasury in your safe, but also maintain your masternode status. And additionally, you can get payouts to an external address or an internal address at Salt. So if you wanted to maintain getting payouts to your Trezor, if you use it on a monthly basis for whatever it is that you do, you're still able to do all of that. And so we spent a lot of time writing documentation, testing this. I personally set up probably 8 or 10, maybe more testnet masternodes just to make sure this worked properly. One of our concerns early on was making sure that people still got payouts, once they wrote this transaction, and it is possible. So it's been something that has been well received, and almost immediately, I think we got flooded with requests and have funded several loans already against masternodes that have been collateralized for them. So been very well received.
Yeah, very interesting. This is especially interesting because when you have a masternode, some people have been like old school whales, and they just sort of had some Bitcoin was dirt cheap, it just went to the moon, and then they just side shifted some of it to Dash, and it's kind of like they happen to have this stuff on the side, but they have to make sacrifices. Then there's other people who were scrambling to just like emptying out all the little coins in their pocket to try to get enough to get a masternode just so they could be part of this and get the recurring rewards and stuff like that. And some people might have, because of the massive valuation things, like it was once like 1.6 million to buy a masternode, which is just a lot of people. That's like out of the question for a lot of people. Or so for example, I wanted one when it was about $7,000, and I just was in no position to even get anywhere near that at that point in my life.
Right.
Imagine, so this takes out the risk a lot, rather than it's okay, I can put a big chunk of my life savings, if not everything or almost everything, take a risk in this, but then I'm like, literally, you believe in it enough, especially if you think you timed the low of the bear market, and then you're just like, but then you're just sort of holding on, you're sort of like begging, you're supposed to like letting your significant other like buy dinner all the time and stuff, just to like make it through until. That's a little bit of a rough situation, but instead you could just put that in, get a loan out of it. Do you have what would the percentage range for interest on a loan like that be? The only reason asking is I'm just trying to compare that versus the percentage ROI on a masternode and just see that I'm sure it's a calculation a lot of people have done, right? They're like, all right, so I can put that away. Part of my reward goes towards paying off the loan. The other part is just actually free and clear.
Absolutely. Yeah. And one of the mechanics of the way that works is, let's just, we'll probably have to come up with a blog post or something that explains all the numbers in detail. But essentially, if you think about your masternode and you have, 100 right now, whatever it is, $117,000, $120,000 in Dash, and you're earning interest on $120,000, but then you have a loan to pay these bills. And so your loan will be, up to $70,000 or $80,000. So you're earning the interest on a higher amount than what you're actually paying. So, in almost all cases, right now, based on what Dash is paying out, our math suggests that you would be in the green as far as returns goes. Now, I don't know what those numbers are exactly, but based on everything that we've researched so far, it looks pretty good. So, and I would, one of the things like you mentioned is, especially if it's a life savings, I personally am not comfortable based on the volatility. I would probably take out a loan if I was going to do it at 50% or 30% or something that's lower and just use the money that I needed. And that way it's a little bit safer from a risk perspective. And so, the interest rate on one of the things that affects your interest rate is your LTV, your starting LTV. So, using the money that you need and paying it off as you go probably makes a little more sense from a loan mechanics perspective. But we do have a great finance team that's working on actual numbers of what this looks like and trying to write it all up to make it very clear to Dash holders and Masternode holders specifically what those mechanics look like. But you're absolutely correct. That's I think what a lot of Masternode holders are kind of realizing and starting to do with our offering.
Now, here's the big terror, because what happens if, say, you have a 100-grand Masternode, or let's just say you have a million master. Let's talk about historical occurrences now.
Okay.
Say you got that, and you have a loan out on, say, half of that or something. So you got like 500 grand loan out on a $1 million Masternode, and then the price crashes and that Masternode is now worth, say, 300 grand.
Mm-hmm.
Like, what happens there?
So your $1 million turns into 300,000.
Yes.
So in that scenario, unfortunately, well, actually depends on your position as a Dash holder. In that scenario, you can obviously deposit more Dash if you want to. If you think that it will drop and kind of level off, you can deposit more Dash to try and keep it above the threshold. You can make a payment on the principal amount. So if you got $500,000 out of Dash in a loan, in the form of a loan, but you haven't, you spent it on a Lambo, but your Lambo is like a rental in Miami, and you're making a bunch of money from that, then you can make a big payment back to the loan to make the LTV lower. So the only way, or you could do nothing, and in that case, you're liquidated. A portion of your collateral will be liquidated to make the loan whole. Essentially, the way our system works is if your loan gets to, we send you notifications at 75% LTV, 83% LTV, and 88% LTV. So as the price of Dash or any collateral is going down, we notify you, push notifications, text messages, phone calls, emails, however you prefer. And then, based on that, you can take action. And so as it gets to 90.91 or about 91%, that's where we actually have to liquidate on behalf of the lender. Mm-hmm. And so one of the things that early on was very unclear to people, they thought we were actually taking their cryptocurrency and we were holding on to it, or, we were stealing it. And that's not the case at all. We actually sell it almost immediately on the open market for market value, market price, so that we can pay back dollars to the lender. And so, unfortunately, in that case, if it went from $1 million to 300,000, you would absolutely, you have those options. But if you didn't do anything, you would be liquidated in that scenario.
Yeah. So part of that might be you have to either see the knife falling, do something about it ahead of time. Just be like, yeah, you know what? I'm just going to pay back this, or I'm going to withdraw this, and however that works. Or you have to be scrambling to pay off as much of the loan as possible, or throw more Dash in there and just hope it works. But then again, if you're gambling a giant amount on a volatile asset that's like all you own, it's like that's kind of like buyer beware at that point, right?
Exactly. Well, and you hit the nail on the head there. It's kind of like, we offer these various options for loans because we're not in the business of telling you what to do and how you can behave. We've built the technology to facilitate, everything from, $5,000 loans up to $25 million loans, 30% LTV, 70% LTV starting. So, it's all based on your personal risk profile. And I think, me personally, when it comes to like something like this, leveraging it, I would rather hold on to it long term, holder. So, it's something that I would personally probably start at a 30-40% LTV, but it all depends on what you're doing with it, what you're using the loan proceeds for, and what you think long term. And so, I think that there's options for everyone to kind of take advantage of however they see fit based on their risk profile.
Now, I heard rumor about multi-user business accounts.
Mm-hmm.
Is that just a rumor? Is that happening, or what? Or you want to talk about what that is?
Yeah, absolutely. So that's live right now. We actually just launched that. Let's see. I think it's been about a week or two now. And essentially what that does is, well, number one, a lot of our customers were businesses. And so, we saw the need to create sort of this almost divergent paths where personal accounts will have certain features and business accounts will have certain features, based on where you live, what business type, that kind of thing going forward. But the main reason that we wanted to do that is so that if you're a business and you're applying for a loan and you have business partners, you can add those business partners to your account and have a little bit more controls and oversight of the account itself. And so, you can imagine a scenario where, like you mentioned, if you have $1 million worth of Dash, or even more than that, let's say, $10 million worth of Dash, because that's how, your business is working and that's what you bought. And you have 3 business partners, you can add all of them to the same account. And then there's controls in place to not allow any one person to make unilateral decisions on a loan or making a withdrawal request. And so it gives you added protection for your Dash or your other collaterals as you're getting a loan with us. And so we realized early on that there was a lot of those requests coming in. And so we wanted to be able to facilitate that. And that's what we've created right now.
Yeah, that would be very interesting. Yeah, I'm sure this kind of thing for like a single masternode might be a more attractive option when the price goes up a little bit more. But so like right now, for example, you can, because of the new, I'm sure you're familiar with the new deterministic masternodes and the whole setup that allows you to kind of do this whole thing. Mm-hmm. But you can split your rewards into 2 different addresses. So if like one person has like 500 grand, the other person has another 500 grand. Together you have $1 million masternode. Again, we're talking late 2017 or, late 2019, fingers crossed. however it works out. But you don't have enough for masternode yourself. So you and a partner decide to say, hey, we're going to each put in half. Right now, we'd have to trust one or the other party in order to actually co-run the masternode, at least as far as the collateral. But we're going to put it to get a loan to actually like start a business that we will take 0 salary from, because we're going to split the salary from rewards on individually. So like the masternode payouts in 2, and then we're just going to be like, that's our salary forever. Yep. We're just going to do that salary. And then we have all this, let's say if it's on $1 million, let's say we have like 500, 600, 700 grand to like start this business. And then we actually and it's not almost entirely just our labor. Like we don't have many other ongoing recurring expenses or whatever. And so we just start a business, run it, and then there we go. Kind of run that setup.
Absolutely. Yeah, that's something that, it's funny that you mentioned that, because that exact use case is probably the most common that we've had inquiries about, that, especially I think we've had a couple of like investment type businesses that are, holding Dash masternodes as part of their portfolio, as a way to grow it, that kind of thing. And so they, it's obviously more than one person, and they want a way to have oversight and controls, in place so that someone can't just unilaterally move that stuff. And so I've heard some really crazy stories about the sort of protections that these businesses go through to make sure that one person can't, do anything with the Dash or their crypto in general, but specifically Dash, and one person just can't move it. And so, this is absolutely an option that would facilitate what you just described.
Yeah, I mean, it seems like it's something that I'm sure the average person has very little. The average non-crypto person has no idea stuff like this is happening. That, oh yeah, I just got a loan to start a business. I'm going to do this. And it's like, well, no, we got a loan based on this big pile of digital money that runs a part of a decentralized infrastructure that then pays out from the cloud, from the sky and then we have Yeah, that whole thing and how the fluctuations work or anything like that, that's got to be something that's completely bananas to most people.
Absolutely. I struggle to, no offense to my mom, she's very intelligent. But it's something that is, you have to really get into it. You have to really sort of either, be into it, or really, you can't really sit on the sidelines and have this tertiary knowledge. You really got to be, really into it at this point to understand all the mechanics, especially, when it comes to Dash. I think it's one of the more, I won't say complicated, but definitely well thought out systems, in a way that I think makes sense for like a big future use of an actual digital currency. And so, I think whether people like it or not, they're gonna know about it, and they're gonna have to understand it. And maybe they don't understand the mechanics of it. It's kind of like the internet, not the analogy that everyone's using, but like, I don't actually understand how the internet works, like HTTPS. I don't know how my browser makes a request, but I know how to Google things. I know how to send money. I know how to use a bank account. And I think, as we build these user experiences on top of cryptocurrencies, I think that people will care less and less about the actual cryptocurrency, hopefully, and more about the usage of it and what it gives them and the opportunities and that kind of thing. So, we're probably still a pretty far ways off from that, but I think we're making strides in that direction, with every release that we do personally, and I've seen it across the community as well. People just trying to do what they can to make it more accessible.
That does make sense, very much so. The one thing that I've always sort of not quite fully grasped was Salt token itself.
Okay.
I saw some, and this is probably because I didn't look into it too much, but I saw some material in the old days about being able to pay off loans with Salt tokens at like a discount or something like that. I don't know if that's still something that's live or anyway. What's the Salt token good for?
So currently, it's definitely been through a lot of iterations. We started with some ideas early on about how it could work and how it could be used in the ecosystem. And as the user base has evolved, we have evolved to meet, hopefully meet those needs with the Salt token. And so currently, the main use case is to reduce your interest rate. And so instead of using it for payments across, or discounted rates across actual payments, it's used to discount your and I use discount in a way it's essentially, right now you own Salt. Let's say you have 100 Salt or 1,000 Salt or 2,000 Salt, how much ever you have. You can actually stake that Salt on our platform against your loan. And essentially what that does is it lowers your interest rate. And so assuming that you make all payments and everything goes swimmingly with your loan and everything's paid back, you will get your collateral back, obviously. And then you'll also get your Salt back. So it's a way that allows people that have Salt to get a lower interest rate on their loan, as opposed to not using it. And so one of the things that we're looking at doing going forward is adding more functionality and uses for the Salt token. And so, I think we have a pretty good team of people on that process and are looking at rolling out some pretty big benefits over the next quarter or two for the community.
Yeah, so the purpose.
Don't want to send any spoilers yet on that.
Of course, yeah, I'm sure you'll let us in on it in due time. So basically, the purpose of the token, of doing it through the actual token, is almost like having a stake in the future of the project. I wouldn't say like a stake in the company because that's clearly different terminology right there.
Right.
But it's sort of like if you believe in Sol, you're willing to put some money for that. That makes us better off. Therefore, it's beneficial to actually to offer some special functionality as a result of that, or at least that might have been the original thing. I don't know how much this is morphing into other things, but yeah.
Yeah, that's exactly it. I mean, it's something where either you have it or you can go buy it currently, but essentially it's a way for people to say like, yeah, we believe in obviously we want the benefit of a lower interest rate. Everybody wants that. But we also believe in the long-term viability of this project. And so it's, a way to kind of support both of those causes. So it's, symbiotic benefit, really.
Yeah, well, fantastic. So how did you guys get to, here's the thing, it's been a constant struggle for a coin like Dash that has some bona fide special features that does stuff more than just send and receive like a Bitcoin clone. it's been a struggle sometimes to get all the different wallets, exchanges, etc., to just do things like enable recognizing instant send or things like that. You guys have gone out of your way to pursue this whole like let people stake their masternode type thing, let people use that as collateral for a loan rather. And where did the impetus go for doing that rather than just say nah, I just treat it like another Bitcoin?
I think that it really comes from our, going back to our dev team and our technology team. They spend a lot of time just in the community itself. A lot of them are, believers from the beginning. A lot of them are early adopters for, one reason or another. And so whenever we're considering doing something especially from a technological perspective, we try to evaluate what it means to add that and not just go, yeah, we're going to do that just like everyone else does. And so one of the things that I think really sets us apart from everyone else is our desire to respect that ethos of the blockchain industry as a whole. But specifically when we're looking at adding another collateral type, what does that mean to add that? What is the perception of that? We kind of take a lot of things into consideration. I think we have a checklist of 20 different questions that get circulated internally that we need to answer before we add another collateral type. And so we take great passion in respecting, the basically the mission of whatever collateral type that we're trying to add. And so, as we grow, we want to do things like support instant sends. We want to do things support like private sends. And so, right now we don't do that, but it would be great for us to be able to add those things in the future potentially. And so, Dash was a special case where we saw an ability to not only something that as we researched and as we sort of started to answer those questions, we were like, this is a really great opportunity and this is a really great currency to add to our platform. But we also sort of, like I said earlier on, like fanboyed out a little bit and saw the value in it. And so we were really excited to have the opportunity to even be able to just add it in that way.
Yeah, it's definitely noticed that financial types tend to see the light on Dash a little bit more than purely technical types, because obviously I think it's very technically sound, more so in elegant engineering than in coming up with some crazy new algorithm or something. Yeah. But I did definitely the finance type people or economics people or people who are understanding the applications of the technology rather than only technology tend to get pretty excited about the balancing and how things make sense, etc. But I mean, imagine for a second, like someone gets a big stash of Bitcoin and then they say they want to send it to Salt to get a loan. So they do that. Someone watching the stash go and just sees that go to Salt and then says, okay, well now now I got him. Now I kind of know this person has a bunch of fiat floating around. I'm going to stick him up or rob him or something. Or okay, we're getting a little bit edge casey here. But then or after the withdrawal, it's just like, instead you have someone like, again, talking down the future, someone who has Dash and has managed to privately send that to Salt. Mm-hmm. So they get their loan going. So now people don't exactly know what's going on there. And then they're able to still like vote on the future of the coin, run an integral piece of the network themselves, and get some recurring income from this, all while having their big old fiat loan for all their real world purposes that don't yet take magical digital internet money. And then when they're done with all their, all right, I paid it off, everything, I want my stuff back. And then it just gets moved in a completely also completely anonymous way, so that there aren't those sort of serious privacy implications that come from using a transparent currency like, say, Bitcoin or Litecoin or something. Yep. We start to see that whole package of possibilities. That's the thing is, I do think that Dash is undervalued relative to a lot of the rest of the space, which that's why I do what I do, right? But I do think it is. And I think that the value will become much more apparent as much more services start to use the bells and whistles. So, for example, there's at least a dozen exchanges that now recognize instant send for deposits, which now are every single Dash transaction, basically. So then people are going to start saying, oh, I got a little deposit. Oh, this happened like this. Oh, my Litecoin took like a few hours to be recognized. Or they're starting to see that. Then they're saying, oh, I got a little collateral on, on Salt. And then I got a loan out of Salt. And then they're like, well, it says something about masternodes. You can keep your masternode. What does that mean? And you start to think about that. And then there's other things about, say, an ATM company is like, look, you put your cash in, and you want to get, because you use cash for an ATM because of privacy reasons, possibly. But now you can get your cryptocurrency out in a private, untraceable transaction. Whoa! All of a sudden, something like that becomes more interesting. So, I definitely think that Salt jumping on the Masternode train is going to be a big part of kind of a flipping in, not flipping in. It sounds too controversial, but like a great awareness building on what a Dash has been quietly working on for all these years.
Yeah, I mean, I think that's going back to your question earlier about why we consider Dash. As we circulated the sort of checklist around the company, different departments, obviously the engineering team was very excited about it. But then, like you mentioned, finance folks were eager to get on board. They understood it and the mechanics of it very readily. And, I think that is one thing that is still to be worked out with crypto. Yeah, I can see everybody's sends. I can see everything that's happening. But I do think that, we wanted, one of the things that we saw just as a blanket opportunity was to contribute to the Dash community and raise awareness of this masternode, like that was even an option. I don't, if you're a trader and you're just looking at exchanges and you see a list of cryptocurrencies and you see Dash moving, you don't know anything about that. You don't even understand that exists. And so, we do see people being introduced to Salt before they're introduced to other currencies potentially as well. And so, there's a potential that someone could not even know or be aware of Dash, but just because it exists in our Salt platform, they might actually go and do a little more research on it. And so, we even within our own platform, we have our guide on how the masternode transfer works. Maybe we can start to do more things about like even explaining what a masternode actually is, how that works. And so, really raising awareness about that kind of thing, just through, it being listed and accepted as collateral on our platform.
Yeah, well, that sounds very fantastic. Well, I'm sure the entire Dash community and hopefully the cryptoverse as a whole will benefit immensely from this interview. So thanks again for your time. It's been very enlightening, and I can't wait to see what other cool stuff Salt manages to roll out for us perennial hodlers next.
Thank you. I appreciate the opportunity.